here's the scoop. I think it's pretty well mapped out. What we got here, the setup you got at play here. Okay. The question, again, we'll go over the two scenarios, and you guys can, on your own, evaluate the probability of each scenario and what you guys think. Okay. But I think it's pretty crystal clear as far as the setup here. Okay. Let's start with the good. Well, the pros and cons of a long setup here, right? So the bull case, okay, the bull case right now is that the tightening of financial conditions, what's going on in rates and currencies and everything else, and financial conditions in general, okay, in all likelihood cannot continue for any lengthy period of time from here, okay, without some interference. Right? You hear the term something might break. You guys know what I'm talking about. I don't have to get into that explanation, but financial conditions have been tightening so aggressively in this downturn that from here at the most aggressive rate since we've been in this bear market. Okay. And for those of you who may not be familiar with the terminology and what that means and all that, just basically, let's say, put it in simple English, the Fed has been rigging the game so aggressively to the downside that usually when they slam on the brakes at this aggressive pace, something blows up somewhere. Okay. In the plumbing of the financial markets, freezes as far as credit's concerned. We got a little glimpse out of the UK, what happened there. So something to that effect. Okay. So the bull case is the rationale that, listen, as wrong as the Fed may be, seems like almost always, right? As far as making forecasts and predictions and whatever they say, you go the opposite. They're not dumb people, okay? They understand this, they see this, they're aware of this. They're not going to come out and tell us this, okay? But they're well aware. They see, in other words, they see what everybody else sees, okay? And the bulls right now, okay, and again, when I say bulls, it's a little different than what we're used to. But again, the bulls in their case right now is that the Fed is done. Okay, they likely will hike in the next upcoming meeting. Okay, but from that point on, in all likelihood, they're going to need to pause. Okay, so they're not going to pivot and start cutting rates, but they're going to stop this aggressive pace of tightening. Okay, and see how things shake out. All right, because more importantly, on top of conditions tightening so substantially over a short period of time, we've talked on this webinar how these rate hikes, it doesn't matter. In general, they have a lagging effect. Okay, they don't raise rates and you see the effect of that rate hike in the economy the next day. Okay, you see it 2 quarters out, right? 6 months out. So we're going to see the effects and the impact that the Fed is having by being so aggressive as far as tightening and hiking rates. We're going to see that next year. Okay, we weren't going to see it now anyway. We're going to see it next year. Okay, so even though inflation may not be coming in as they would like, right? Even though the job market hasn't cracked, even though the economy is holding up well, what they're doing now is not going to affect the economy now anyway. You understand? That's going to be in 2023, right? It's a fact. It has a lagging effect. All right. So the prudent thing to do would be to sit tight and see what kind of damage, right? You slamming on the brakes so hard, the Fed, in other words, been slamming on the brakes so hard, see what kind of damage and impact it's going to have next year. Okay. So that's that's the bullish case right now. That, yeah, the Fed, in all likelihood, is going to hike one more time, and it's probably going to be a substantial one, right? Right. Some people talk about 175, whatever it is. Okay. The likelihood is that's going to be the last of it. And what that means for risk assets, equities, and everything else we've been watching, a likely reprieve, right? So you get a little break in rates ripping, you get a little break in the dollar ripping, which will translate into, we'll talk later about bear market rally or a real rally, but some upside and some bullish momentum in equities. Okay, so that's the bull case right now, right? And you see it right now, even in the price action. Okay, in two different ways. And when I explain to you, you'll understand what I'm saying. Rates, right? If you look at rates right now, like look at this. Okay, crazy. It's crazy. Look at this. Okay, this is the 2-year. All right, so this thing's ripping this year, right? And continues to rip. Right, new highs here, new highs in this bearish cycle. All right, but equities, right? The S&P 500 is not making new lows with it. Okay, you could see there's a bid in the equity market, in all likelihood because of that bet that regardless of how high these things go, the Fed is likely done. Now, again, the market looks ahead, right? It doesn't matter what's going on now. The market always tries to price in what may lie ahead. Okay, so that's why I think we're seeing, right, the Fed's on the bid, good call, but that's why I think we're seeing this divergence right now in the indices. Again, the indices aren't rallying by no means, but they're holding up better all considering. Okay, so that's the bullish case. The bearish case to that, okay, and you're not really hearing about the bearish case, the current bearish case. Right? The bear case we hear is that there's likely going to be a bear market rally and then shit's going to hit the fan next year. Okay, that's the bearish case. No one's really talking about the bearish case for right now. Okay, the opposite of that bullish case. And basically, in my eyes, okay, what that would mean is the Fed doesn't take the foot off the brake pedal, remains aggressive, hikes in November, and continues to sound extremely hawkish. Financial conditions further tighten, right, at this aggressive pace, and something does indeed break. Okay, and depending on what breaks, some people say, oh, the Fed wants something to break. No, they don't want something to break. In 2008, Lehman broke and shit hit the fan. You know what I mean? Again, we could go into conspiracy theories and all that, whether, you got people who think it's purposely done behind the scenes. But, there's a rationale out there that the Fed wants to purposely break something. They tried that experiment. Okay, it doesn't work. It's not as easy as for them as they just break something and then they can go cut rates and everything's beautiful again. Depending on what breaks, it could be systemic, right? So that's the issue. Okay, but nobody's talking about it in that manner. They're talking about it as if the Fed breaks, it's a good thing, and if the Fed takes the foot off the brake, it's a good, right, bullish thing, and both scenarios are somewhat bullish. A lot of people are looking at it that way. But my opinion, I think the risk is that if something does indeed break, depending on what breaks, and you do buy ahead of the knowledge of the foot, the Fed taking the foot off the brake and relaxing, you could get caught, right? You could get caught long, whenever you're long, while something breaks, and that can bring some pain, right? Again, you can make the point that if something quite important breaks, you'll have an 87 style crash type scenario, right? And with again, this is a whole other conversation, but if you're a member of the steam room we've been talking about recently, with all the put selling in S&P, SPX and SPY that's been going on, if something breaks, that thing's going to snowball into something bigger, I think, in the equity markets anyway, because you're going to have put sellers caught offside because they're betting against a crash. Okay. You're not hearing, I think, the bearish case from those two scenarios. Again, the bearish case a lot of people are making is that it's just going to be a bear market rally, but you're going to get the rally anyway. Okay. Where I think, they're missing out. Again, it may not be a high probability event, but there are higher odds of it now with the Fed doing what they're doing. Okay. Because that's what causes these things to break. It's always the Fed. Right. So, I mean, if you put a gun to my head and you laid the scenarios on the table and you asked me, would it be worth, is it worth taking a shot on, is the upside of the bullish scenario worth rolling the dice on something? And I would say yes. Okay. I would say yes. Like if you're fiending here, right? You haven't played anything in ages and you're fiending and you're playing through the option market where you can control your risk, right? All you're going to lose is your principal that you put into calls. Okay. Do I think the upside's worth it if the bullish scenario plays out? I do think the upside's worth it. Now, again, you guys know, if you asked me that over the past 3 months, I would have said no, right? Okay. But now I think that if you get a Fed pause, okay, and again, that's far from a Fed pivot. I think what you will likely see over the short term, you would see the dollar soft, the yield soft, and I think that would be a cue for shorts to cover, algos to chase, and equities. You gotta understand, there's a lot of underexposed players in this market right now. There's a lot of people that don't own anything. And I think if you get a Fed pause, everyone will take that as a green light to own equities, right? I think, again, I don't think that to be true, but I think over the short term, again, you're playing options, just looking for the hit. I think that can translate into some decent upside. Okay. Here's the problem right now that we're facing. Okay. And I think it's been a problem throughout this bear market. And tell me if you agree. Okay. What's made this bear market even more difficult than it actually is, okay, is usually and I've been part of, I've been through my share of corrections and bearish climates. Okay. In the past, what I usually was able to do a lot more efficient than I can do now, okay, is find entries at the bottom of this downdraft, okay, based off sentiment, sweeper activity, and stuff we look at, okay? And even if I was early for a trade, I'd get bailed out with a rally, okay? That's usually my playbook in a bear market. I just trade intraday and I wait for those setups. That's all I do, okay? The problem with this bear market, this go around, and what's made it so extremely difficult, twofold. One, you got the Fed that's been manipulating equities lower, right? We talked about that through the whole bear market. They're pressing against any bear market rally. We've never had that before, okay? So now we're concerned about how far that rally may go to the upside, right? Will the Fed allow it? Okay, that right there makes things extremely difficult. The other thing that is really frustrating to me, even more so than the Fed, and tell me if you guys aren't realizing this too, especially now. On the tactical side, on the trader side, okay, everybody is a bull when you get to these points. Right now here, okay, the bearish of bears out there are getting long for a bear market rally, right? They look to get long for a bear market rally every time we make new lows, every time. Okay. So the problem with that, usually those tactical bears would come in handy. They get all bared up. They think the world's coming to an end. And, you would squeeze them and that would set off these bear market rallying squeezes. Okay. Now what happens is these bears, they cover into the lows, they cover their shorts, right? And then get long, or same thing, slap on bullish hedges. Okay, so the calls now, they're more long than they were, even though they may be overall short. Okay, and the problem that creates is that now, you can't have everybody cashing in on bear market, right? Bear markets are extremely difficult. You can't time these things like Houdini, as we like to say, in and out. So it's almost like, and I've been throwing the word around, right? Whether it makes sense or not, that, you need to marinate a bit before we can squeeze, right? Marinate near the lows. And the reason I make that point is because now you have even the bears who think the market is going a lot lower from here, looking for a rally. We got to wear them out too. You understand? So you get these little flash in the pan type rallies that fade. Okay. And what happens is eventually, and hopefully, you get to the point where people lose hope on a potential bear market rally. They give up, right? So bears are so bearish, big picture, that they're like, I'm not wasting my time. I'm not wasting my time trying to catch a bear market rally. I'm costing myself money. I know this market's heading lower. I'm just staying short, right? They get to that frame of mind rather than trying to catch every single move like they have a remote control. And I think that's what's made it even more frustrating and, again, just more difficult in regards to trading, is that, it's more shakeouts and more chop added to the equation, because now you got even the bears who were supposed to help you. You need to shake them out. Okay, so that's what I think is happening right here, and the same thing here. It happened here too. Okay, you can see here, right? Same thing, right? Everybody playing a bear market rally, fade. Here it comes. Oh no, I'm done. I'm not. We're going to new lows. I'm not trying to catch this shit, and then pound. Okay, so the only time we see this move here, okay, this easy move where everybody chases, that's when shorts cover, right? So that's when the real bears get caught and start to cover. Okay, that hasn't happened yet at all. There hasn't been any signs of that. CTAs, they haven't covered a stitch of their short position. So there's been none of that going on yet. And that's why you haven't seen, any follow through or any momentum on any upside move outside of a day or so, right? It's been more of this chop. So that's going to be like confirmation, right? When you see that, that's going to be confirmation that the bear market rally is lit. And, as we know, those things can accelerate rather quickly once that match does get lit. Okay. So the reason I make that point is you can choose to sit around and wait for that, right? And then hop on for the ride. Okay. And even if, let's say, the indices may extend, if a real bear market rally does show up, you're going to have a good amount of names. It's going to pull higher with it. You understand? So even though the market may be a bit extended for you to want to chase, there'll be more than enough names that are pushing higher, right? You'll have laggards that are still haven't even moved yet. You'll be able to make money in a bear market squeeze, even if you're patient. Okay. But if you're looking for that, if you want to try to front run the move, okay, and that's that's what you're interested in, and you're willing to take that risk, right? You feel it's worth taking that risk because of the entry you may have. Here's where you have to look into weakness to pull the trigger. because if that comes to fruition, you're going to be chasing regardless. You understand? You can't wait around for that entry. You're going to have to pull the trigger somewhere in here. You're better off doing it into weakness because you get it. But otherwise, you're going to be chasing, because as soon as any sign of Fed pause, you know what's going to happen. You know what I mean? You know what's going to happen. So, and the things to look at, another thing about, I use the word crystal clear in jest, but the reason I think there's at least clarity out there for us is, if you're trying to monitor this market intraday, there's nothing to be distracted about. Nothing, in my opinion, honestly. Like, even the sweeper activity comes second fiddle to what's going on. Charts, all that stuff mean nothing. They mean nothing, okay? Because I don't know if you've been paying attention. What am I doing here? But when yields in the dollar push higher, it weighs on equities. When there's a little reprieve in the dollar and yields, equities have some bullish momentum. That's all. I mean, it's been like that to a T. It's been like that to a T, right? And that's, again, going back to the point of a potential bear market rally off any hint of a Fed pause. You're going to have, some weakness in yields in the dollar, and right, you don't need me to tell you what that translates at right now. Okay, right now, anyway. That's not always the case, but right now, that's what it means to equities, right? So if you get a little breather in any of those, again, interest rates on the dollar, and the dollar hasn't even been too bad. It's more interest rates now than anything else. I mean, look, okay, look. This has to stop making new highs like this, right? This has to stop. You get something just like this, just as simple as this, and you'll get a pretty decent bear market rally. You know what I mean? So that's the story. Again, we may not like it. I'm not crazy about it. I wish, I could rely on sweeper activity or sentiment and some, stuff I'm comfortable with, to make sense out of the market right now. But, you can't, this game doesn't give a shit what you think and what you care about, Unfortunately, doesn't work that way. But if you want to monitor this market on an intraday basis, again, for the right now, that's all equity players care about. Okay. So, and I'll give you an example, right? Let's say you want to be prudent about this, right? We're in a bear market. Yeah, you would like to, catch a bear market rally for a play, but you're being conservative and you'd rather be more prudent about things and let things play out, right? You're a little late, if possibly, but you'd rather let things play out. What I would recommend is, again, what we've been doing every day. You see how yields react with sweeper activity, right? And when you get confirmation that yields are rolling over with the aggressive call sweeper activity to back it, that would be your entry, right? That would be your entry to catch one of these bear market rallies. Now, there may be instances. I'll give you an example, like today. Okay, today we saw yields right off the open, right early morning. Yields were calm. The dollar was calm. There was a little sweeper activity out there, right? Market squeezed early morning. Things kind of settled in. Then you had Fed Harker or whatever his name is come out and throw out some hawkish lingo, and yields started perking up, right? And then equities rolled over, right? So you're going to have those. If it happens intraday, you're going to have that pretty decent entry. There's no doubt about it. It's just which one ends up being the big one, right? In regards to a bear market rally, you're going to need to keep an eye on yields, because the market's not rallying in the face of yields going parabolic here. You know what I mean? It is what it is. So what do you guys think? Anybody have anything to add to what I just said? You guys put it this way. Do you see it the same way here? What banks? Yeah, there's there has been some talk already that there's some behind the scenes stuff taking place in regards to central banks and eventual pause, right? So that right because again you got quite a few things out there that signal. I don't want to see stress because we're not seeing it in our economy per se, but in across the globe in the world. Listen, you don't need to be an economist, right? When you see shit like this going on, right? This is dollar yen, okay? These things don't move like this. You understand? Okay, this is a monthly going back to the 70s, right? These things don't look. This thing does. This is a weekly. These are not your normal moves. These is in the currency market. You're talking about countries. Yeah, it's nuts. So when you have a move like we're seeing in the dollar and rates, it doesn't last. These periods, you understand, it doesn't last long until something breaks its path, right? Something happens. It's going to break something. It's going to break something. The question is twofold. The question is what breaks and the magnitude of that break, right? Or does the Fed acknowledge this, and does something before they break something, right? Because again, they've been saying it. They've been drilling it into our head that at some point when they feel they're at a high enough level interest rate wise, they're going to sit there and they're going to pause to reevaluate. They're not going to cut, but they're going to take a look around to see what's going on. And there's a lot of people, very smart people who know the game, who think that point is pretty close right now. Pretty close. Again, in the market's eyes, okay? The market doesn't care about the next couple of weeks. The market doesn't care about that. All right. So if the Fed is gonna if these are the last of the Fed hikes that we know about, that the market's priced in, okay, that's gonna be bullish for equities over the short to intermediate term. Okay. Then we can have a conversation about everything else, where right now, for me, it doesn't look bullish one bit. It looks even worse, to be honest. But things can change. You know what I mean? Things can change. But I think we've had this conversation on this webinar. I think that the scary stuff, right? The ugly stuff that we're going to see is not here yet. Now that may not necessarily mean a lot lower prices for equities. Okay, the market possibly could have been factoring all that in, right? But the ugliness of the noise and what we see on a day-to-day basis, it's not here yet. Everything that's bad, what we're seeing right now, is related to inflation. Inflation, right? It's not related to what the Fed has done, which is deflationary. You're going to see. You might see a mixture of the two. That's what people talk about, stagflation, right? But you're going to see the effects of these rate hikes on the economy. And that's when you're going to see jobs get hit and fundamentals deteriorate and everything else that goes on. Yeah, Dominic, honestly, whether the market priced it in or not, I think big picture wise, I don't see, for me, it doesn't make a big difference. Because I think no matter what, okay, until we see a lot more ugliness, the Fed is not cutting rates, okay? And if the Fed is not cutting rates, forget about the market you've been trading in for the past decade, because you're not going to see anything like it. You're not going to see anything like it. You know, the type of stocks, the names, you know, all that stuff, those are all lagging indicators for my, at least my opinion anyway. You know what I mean? We're probably going to experience something like what coming out of the 2000 NASDAQ blow up. Same shit. Same shit. All right? We talked about these hockey sticks and all these growth things. You got hockey sticks all over the place. You know, time flies by. Right? We started talking about hockey sticks like late spring. Go look. They all look like hockey sticks. You know what I mean? They all look like hockey sticks. All these stock charts. So for me, whether it's priced in or not, you know, it doesn't matter, because it's going to be the new names. Everything's going to be new that we see anyway, that we will have an interest in. Okay. So now let's rewind with that, right? That's the more tactical view on the market, right? That's just basically so we all have an idea of what we see in front of us right now. And the reason I say that is, you know, a lot of people don't pay attention to these things. They want to trade this market like they were trading, again, over the past decade. And it's a different game right now. Okay. You don't want to pay attention to yields and the dollar. You're going to have a tough time trying to make sense of what's going on. Okay. I got news for you. You can say, I don't want to buy the price. It's only price pays, price this, price is truth, price is Stugatz. I don't care what you say. If you're not paying attention to what yields are doing on a day-to-day basis, you're not going to be able to have a clue what's going on. You know, facts. And that's right now, right? Again, over the summer, we were talking about credit default swaps and spreads, right? And how important they were, and they were controlling the action. So, I mean, but that's a bear market. In a bull market, none of that matters. You're right. You don't have to pay attention to it in the bull market. None of that matters. You understand? You can make money paying attention to fundamentals and technicals and all that fun stuff. But in bear markets, there are overpowering forces out there. And these are the forces. You understand? There's big things at play. All right. So that aside, right? Big picture wise, as I was talking on here in the last couple of webinars, okay, whether we bottomed, whether the Fed is going to pause, whether the Fed is going to pivot, all that's beautiful to talk about, okay? What it really comes down to, big picture wise, it comes down to individual names, okay? At the index level and the crowded mega cap names are going to be difficult to play. And honestly, I don't see that going away anytime soon. That's why I was telling Dominic just now, whether it's priced in or not, to me is irrelevant, because I think at the index level and those crowded names that everybody stares at all day long, those names are going to be really difficult. You got a lot of baggage, a lot of people, players who've been buying these things for ages caught. Okay. And when that happens, you got a mess. The flow is a mess. The price action's a mess. Everything's a mess. All right. So as I've been, with members, we've been talking about it a lot lately, even though we haven't been seeing much of any signs of it. It all comes down to the action in individual names. Once we start seeing quality action in new individual names and new setups, nothing changes. You understand? We're still in the shithole of a bear market with nothing going on underneath the hood. And that's that. Okay. There's going to be a point in time when we start to see action in individual names, and then we start to see more of it. Then we start to pick up on subsectors as a whole instead of just individual names that are catching action. And that's when the climate changes to me, for me, in a big way. It's not going to change at the index level. It's not going to change in Amazon or Google, but underneath the hood, you have an edge in individual names. And in my opinion, a big edge, a sharp edge. But right now, you're at the mercy of the Fed and this shit. You understand? Yeah, and we have no choice. Okay. Once we start seeing that action I'm talking about in new individual names, we don't have to pay attention to this stuff as much. Okay. Because if the market's down on whatever is pushing things around at that current time, we can buy those names that are catching action into weakness, and that's our opportunity. That's our opportunity. You understand? Now we don't have that opportunity because they're not buying any. You know, they're just not, there's no new buying out there. Everything is short hedging, speculation, and that's it. The majority of it. Yeah, it's not even key. If this plays out similar to like the 2000 bear market, okay? What's likely to happen is before the indexes and some of the larger tech names bottom, we're going to start seeing action in other individual names and pockets of the market that significantly outperform. You understand? Before there's a bottom in the overall market. Exactly. There's going to be new leadership starting to form. You're going to see money start to pick out and find these places. You know what I mean? Yeah, it's going to start slow in names, and then you're going to see certain sectors, right? And then what you see is you're going to see tech names start to see action even while tech is weak, but they're not going to be the tech names you're used to seeing. You understand? You're just start to see new names that don't have the headaches and aren't nearly as crowded, obviously, as some of the older names, that are growing exceptionally well, their fundamentals are solid. You understand? You reach a point with some of these larger growth names. I mean, you can't grow at 500% forever, right? I mean, that's what happens. So in all likelihood, it's going to be like small mid cap for the most part that you start seeing the action. That's how it usually plays out. Okay, what would change that is if something really significant does break, okay, and then you got the Fed throwing the kitchen sink. You understand? So if you have, I don't know, let's say, the cruise lines go under, or the airlines go under, right? Or something to that effect. And now the Fed's got to implement QE. What are we up to? 4? Right? And they do similar to like COVID, where they got to expand the balance sheet and literally throw in the kitchen sink again. Then what you'll see is everything rally. You understand? They're rigging the game. You'll see everything rally. May not be, initially, right when that happens, but that's what eventually it'll turn into. Right? I'm saying that's the difference between the scenario I gave you, individual names under the hood, and that. You need the Fed. You would need the Fed to get involved and do their thing again to get that V shape across the board and everything. If they choose not to do it, that's the first scenario that, Robert, that I told you I think we're going to see some of anyway, even if they do it or not, because I don't see what's likely to happen, right? What's likely to happen is we go into next year, okay, things start to unravel, all right, fundamental, all the rate hikes we've been seeing, the tightening, all start to play out next year, okay? The Fed has to pause, they probably already did, and that's my scenario. The indexes probably don't bottom. The popular names probably have more selling to do, okay? Because we haven't even seen fund flow crack. When fund flows crack, what names you think are getting sold? You know what I mean? So while all that happens, the smart money is going to start finding value in stuff that's been taken down the same way as everything else and shouldn't have. You know? And you'll start to see, like I said, if we're in a recession or heading into a recession, you're going to see recession-proof sectors probably see buying. Medical supply, some biotech. You understand? Stuff like that. They shouldn't be taken down as aggressively as something cyclical. So that's the point I was trying to make. You're going to start to see new names, new sectors emerge, even while the indexes continue to sell. Okay, that's the scenario that I played out for you. You don't like that, and you're hoping for more of the same over the past decade. You need the Fed. You understand? You need the Fed to come in in a big way. Right? I'll give you an example. I think I showed you guys this anyway. But for those, it might have been on the members only thing, right? So, I don't want ES, I want SPX, just so you guys get an idea. And NASDAQ was even worse. Okay, because pictures always drive the point home better than. Okay, so this was the 2000 debacle. Okay. Right? So while everything took time to run its course, okay, you had underneath the hood, I told you guys, right? From here, where was it? Right here, I think. From here on, okay, was the best years of my career, long only, on the long side, no shorting, from this all the way to the end of 2003, which is over here. The best years of my career to this day. And the reason being was what I just explained to you. Even though you could see, this is the S&P 500, had lower to go before it bottomed, underneath the hood, while everybody was staring at the NASDAQ and AOL and Yahoo and WorldCom and bullshit, right? Underneath the hood, there were small mid-cap names that were getting gobbled up like they were SPACs in the Cathy craze. Okay? From medical supplies to roofing companies to God only knows. Okay? But they look like this, and I showed you guys the chart. Does it show on the chart? Let me see if it shows on the Russell. At the time, it was the SML. But the Russell, wait, is this it? Oh, no, I got to go back here. Okay. The Russell was having rips like this in the interim. You understand? And every time the indices like SPX went to new lows, okay? So when this went on, when this happened, okay, when this went on like this, those new leaders, those new names I was playing, they went up for like 3-4 months during this, okay? I'm talking about some names tripling, doubling, tripling, okay? Now, again, $15, $20 stocks going to 40, 50, okay? That went on during here. When the market went to new lows and sold off aggressively like this, those new leaders, all those new names, would correct. So they would look like this on the chart. New highs, and then they'd have a correction. And then they start going higher again. You understand? So as the market here went to new lows, these things went into just a correction, a shakeout, and offered up another opportunity if you want. There were so many other names that you wouldn't, no one played the same names anyway. Yeah, so that's what, again, we're not seeing any signs of it at all yet. I'm being dead straight with you. Okay, I wish I could lie and say we're seeing signs of it. We're not seeing any signs of it yet. But, you know, we've been in this bear market now, right? Since the start of the year. We've been in it for a bit where it's closer than we think. You know what? Yeah, exactly. Well, we're never going to pick up on the correlations, Eric, because the correlations, everyone pays attention to the big names and the indices. You know what I mean? But you're right. You start to see those correlations. You start to see outperformance, Eric. That's what, if you're paying attention, you start to notice. Right. Now you got, like we said, those greater forces at play. That's all that matters, right? That's all that matters. But like you're saying, you're going to see that break up. I was playing both, but I was an equities guy more than anything else. But honestly, T, there were, I kid you not, there were a lot of stocks that were like $5. Like, why would I even want to play the options? You know what I mean? They were $5. I remember I told you the Chinese internet stocks, when I bought them, like NetEase, I remember like it was yesterday. My average cost was like, I think was it NetEase or Cena? Cena was like $2. NetEase, I think, was like $3.85. You know, and that's before China tech. Nobody was paying attention to that. That was the start of it, you know? That was the start of it. But I'm trying to remember like stuff you would know, but it wasn't SPACs, it wasn't catchy names. These were like, every time you pull up the company to see what they do, okay, and their fundamentals, they were all profitable and they all had growth rates of like 50% or better. You understand? Their fundamentals were legit. They just got taken down in the 2000 destruction with everything else. So, that's how the cycles usually play out. That's how they play out. Okay, like all the names you guys know. Some of you are just trading for a few years or 10 years. Some of the leaders you guys know weren't leaders the last bull market. You understand? They come from somewhere. They're new leaders. That's how the game works. We went over this too back in 2000, right? Microsoft went through a period of time where the stock was dead wood. It was like that meme with the guy with the stick hitting, go ahead, do something. Microsoft was as useless as tits on a bull for like a decade. You had hockey sticks, at best, hockey sticks in a lot of those names. Some of them went poof. You know what I mean? Some of them went dead. All right, so it's the cycle of the game, guys. It's the cycle of the game. When the Fed rigs the game as much as they have post 2008, okay, that screws up the cycles. That messes with the cycles. You know why? Because they save a lot of these companies from going under. You understand? Right, exactly. That's how these companies survive. Like, see, like this, they're sniffing out death in this name already, CCL. Like these names, when the Fed throws in the kitchen sink, these names can get bailed out, right? They can borrow an infinite amount of money for nothing. Now with interest rates soaring, you got a lot of debt and you need to get your hands on cash. One, you got to pay through the ass to get it. Two, when the economy starts to roll over, you can't even get it. And you see a lot of these companies who are highly debt, right? And fundamentals are sour, go poof. You know what I mean? So that's why that's why you get those hockey sticks, and eventually, they get bought out or go bankrupt. I mean, that's just the business cycle, guys. It's the way it goes. Sometimes they get out of it, right? I do AMD. I told you guys, I remember the stock was dead at $2 forever. Somebody told you they were buying AMD, you laughed at them. This moron's buying AMD, this fucking idiot. Stock was stuck at $2 for ages. Right? NVIDIA. You guys know NVIDIA as a stud. Exactly, Eric. NVIDIA was a nobody back then. It was the making of a new leader, NVIDIA. Nobody knew. NVIDIA wasn't known as a stud. Yeah. So you know what I'm talking about, Eric. So that's the stuff to look forward to. I know, it's not in front of us now, and it's hard to, I want to get excited, but even see it as a reality. But, that's the big picture here, guys. Until we see the start of that materialize, and that's where you really have an edge, right? There's no edge right now in what we look at. You guys see the sweeper activity? I mean, there's no edge in that sweeper activity right now. The sweeper activity is godforsaken awful, right? You can count on 3-4 fingers over the last, 4 weeks of names that caught some action that you can make the claim you have an edge in. Otherwise, you pull up the flow in Tesla, Apple, all these names, it's the same shit every day. Calls are trading, puts are trading, there's some size on both sides. It's just useless shit. It's just regular flow. Players hedging, players replacing stock. These things are dead, right? You play NVIDIA off a sweep. 10 minutes later, they may be bombing put sweeps, and you're dead. You know what I mean? So, I mean, that's where we are. It's going to change. I promise it's going to change. One way or the other is going to change. Either shit is going to hit the fan and the Fed's got no choice but to step in, right? And then, like I said, a lot of your names that you thought were dead and buried are going to come back to life, like Frankenstein or whatever the fuck it is. But if the Fed refuses to come back in the way they did, cycle time, and you got to look for new guys. Yeah, they may listen. The thing is, Eric, what a lot of us, including myself, underestimated is how long that may take, though. You know what I mean? How long they rigged this economy, to the upside off of COVID so much that it may take longer than we think. It may take longer than we think. Unless something cracks big enough. Oh man, forget it. I used to hear those stories all the time with the Nikkei. That was the market of all markets. That was like China back in the 90s, the Nikkei. And then it topped out and hasn't seen glory since. From all, you're right though. It's true. It's, that was all from central bank doing. Yeah, Eric, that's the problem, that's the problem. But I really, listen, this is new to anybody who tells you they know what's going to happen is full of shit, because this is new to, we don't know how this is going to play out. You know what I mean? We don't know how this is going to play out. Josh Brown had a great point today, and I don't give him, with CNBC, I don't give him much credit, but he had a great point. 6 months ago, somebody drew a face of a ape or a giraffe on a piece of paper and was selling it for $100,000, $200,000. We're coming out of craziness. We're coming out of craziness. So, there may be some rough times ahead. There may be some rough times ahead. And the Fed has to allow it to happen. But again, all that means, guys, again, the best advice I could give, right? Until you see the Fed start cutting rates, just stop. Forget about what you did for the past 10 years. Forget about the names you were playing for the past 10 years. Because that playbook is torched. You know what I mean? That playbook is torched. So think about like the energy names, right? That's one little pocket, and that's based off a commodity and than anything else. But what went on in energy, right, late last year into this year, the energy names, that's what we're going to see happen in other sectors. So again, if you think of it through those lenses, like if you ignored the energy names, which a lot of us did because they're energy, but if you ignore the same type of action in other sectors and you just wait for the market or for a FUBO to break out, you're going to have a tough time. Yeah, Eric, no matter what, right? It's going to be fascinating to watch. Because like you said, for something to happen and for them to have to step in now and start cutting rates, I mean, you have people calling for their head, no? So Wilson, that's a great question, because what I think, if it's overseas, I think it's going to be more targeted than anything else. You understand? They're not going to, we're not going to see them pivot and, start rigging the game over here. It would have to be something here, in our markets. All right. So you're seeing them now, you see these swaps and all this shit. There's targeted shit out there that half the stuff we don't even know about what they do. Yeah, exactly. But for like full-fledged throw in the kitchen sink QE, you're going to need something to break over here. And let me tell you something. You probably say, no, they're not going to do it. I think they experimented with Lehman, and I don't think they're going to go down that path ever again. Bernanke was stubborn. I mean, guys, they let Lehman go. That's like letting, Bank of America or Wells Fargo go under right now. You know what I mean? They let Lehman go south. And they opened up a can of worms right, exactly. I don't think they're going to let that, they would let that happen. My opinion anyway. But who knows? Who knows with these guys? Who knows? Eric, that's what I'm optimistic about, the fund flow. Like, you could put your money in a money market, Eric, right now, right? Like a CD where you don't even have to lock it up and get a return. You're not going to deal with this shit too long. You know what I mean? Yeah, I know. Exactly. So we're seeing good signs. But, for us, listen, you don't need that ripper off the COVID lows to find success in this market. Anybody can make money in that type of market. You know what I mean? Anybody. You just, if things, even if we're in technically a bear market, you need, as long as things aren't falling apart at the seams and money's finding, there's stock picking going on, you can make money in this market. You can make money in this market, and you could do well in this market, and you can feel accomplished and like you have an edge and it works. You understand? Now, again, off COVID lows, and even now, it's all that everybody's doing the same shit. Yeah, you see, Eric, that's a great point. Like, let's say we do have some sort of flash crash event like 87, whatever. The market didn't storm back, but it held that low, right? For quite a while. And I wasn't trading in 87, as old as you think I am, but I guarantee you there were individual names under the hood that were doing quite well. Right? All new leaders out of the late 80s into the 90s. So that crash, even though it's bad short term, it's a good thing. But yeah, we're holding our breath here for it. Like, look at I think I posted it here. Let's see if I can just so you see where it's at now. Is this the updated one? Yeah, right. Oh, so this is like what Eric is referring to here. See this dark blue line? You want to see that crack. When it cracks, that's what I'm saying. The big guys are going to suffer. And again, I don't know how much that equates into as far as downside, but the upside is going to be really difficult, Well, this is what it looks like here. They've sold, this is the fund flow, passive fund flows, right? So retail traders have pretty much thrown in the towel for the most part. So the tactical guys, a lot of the new COVID traders, you understand? The majority of them have given up. Yeah, pensions too, or any money. I mean, any money right now, you can get a return. I mean, think about that. If you needed to see a return for retirement, you had nothing else to buy but equities. You know what I mean? Nothing. You were forced into equities. That was the whole goal of the Fed, to force people to take risk because they were battling deflation. Now it's the opposite. Yeah, now exactly. They're forcing them out. That's what they want, So, this and that's a like Hartnett's point of Bova, who we talk about a lot. For that V-shaped recovery, for a lot of the the rally a lot of people want with the Fed involved. We've never seen a V-shaped recovery in equities without fund flow capitulation. You know what I mean? They always have capitulated before any of those rallies. Then the market can climb that wall of worry again. But listen, that's big picture. That's what I preach to you guys. I'm talking about in regards to individual names and how this may shake out. That's big picture. That's what I'm preaching to you guys, to be smart. Don't stick your neck out in a big way right now, for that reason, that there's light at the end of the tunnel, and they'll get here no matter what happens. Okay, we flash crash 87 style. There's light at the end of the tunnel after that. You understand? We go into a grueling bear market for 3 more years. That first scenario with individual names, new leaders, plays out. You understand? So there are things to be positive and constructive in. But what you hear on like CNBC and television and media all day long about, buying the same names all the way down, or buying the indexes all the way down. Let me tell you something. I've seen people get annihilated doing that. Right? Just think about like in 08, if you bought on the way down the same shit that was going up. Right? Or the 2000 bubble. You get devoured. Meta, you get destroyed. And then that's what's still out there right now. But so big picture wise, we want new names. Now, as far as tactically, right? And that's where a lot of us are trying to get a gauge on here, right? Over the short term, just a trade, even for Christ's sake, which they can't even make that a little easier for us. I'm not even saying easier for us. what the intro into this webinar is, what we spoke about, that's what we got on our hands here. That's what we got on our hands here. You want to play this conservatively for a trade. You keep an eye on this throughout the day, right? And when you see a squeeze with yields rolling over, you play off that entry, right? You play off that entry. And that's where, you can play it conservatively. So in other words, like this morning, you get a rally, right? It fails, yields roll over, you get stopped out, you raise a stop, you made some money, or you had a break even stop, you broke even, no harm done. Okay, if it turned into the bear market ripper that we're talking about, you'd have yourself a sweet entry. But you want to see this confirm for any shot to be real. Like this is a 5-minute intraday here, Like, see, it's not happening when this is happening. It's not going to happen. It's not going to happen, right? So if you find an entry when this is happening, right, and this starts to happen, that's where you stop yourself out and you're not getting buried, right? So the problem with a position overnight, the overnight risk is that flash crash if something breaks. That's your major risk. Now, if you're playing with options, calls, and you're going to put in what you're willing to lose, who cares? You know what I mean? And I think the action in individual names is going to improve coming out of earnings here. I could be dead wrong, but I really do think so. I really do think we're going to see some stock picking. If not a bear market rally at some point, into the end of the year, we're going to see at least stock picking, at least. Because there's been hardly any of that. So let's talk about what's been going on, right? So you guys know what to look for anyhow, okay? We've seen little drips and drafts of it in what I call them story stocks, names that have something going on, an activist, buyout rumors, whatever. There's some sort of news surrounding the company, right? Like they bought this today. Like if you saw the action, if you were around today, because the action was dead all afternoon, okay? Or even this morning. I can't remember what they bought this. Oh, energy was a part of it. But anyway, the action this morning with the squeeze, there wasn't anything spectacular there. It was just bullish activity. But this is that different action, okay? You guys remember this? I don't know if we talked about it on the webinar, but some of you remember this. I didn't want it on this chart. Now I screwed that up. Okay. This guy caught some action, really sharp looking action when right before the bear market squeeze the last time over here, NTNX. Okay, stock didn't do much when it caught the action, kind of just chopped around, did nothing. Okay, but saw some quality action. Okay, caught news. All right, and then today, I don't know why, I thought this thing got caught a bid. I thought they were bought out. Maybe they're getting a higher bid. Did you guys see the action in it today? This afternoon? What was that all about? Anybody follow his name? You're retiring. Oh, at the top. Very nice. Now you can go and park your money in some safe shit and get a return on your money, Rich. Who's better than you? Does anybody know what's going on with NTNX by any chance in hell? Nobody follows it? Ooh, what did I just X out? Yeah, I think from I think it was an activist, wasn't it? Or was it a company takeover? I don't know what exactly, that's why I'm asking. I don't know what exactly went on here. But anyway, the action, what's been going on in this name, and again today, for whatever reason, this is the action that you're going to see in other things that, don't have takeover rules. They're just buying it aggressively. What are the names? You literally could count on one hand the names that, we talked about this, right? Wendy's, you have what's his face in it. P company said it. Yeah, it was okay, it was, right? Oh, they're exploring a sale. Oh, okay. So they didn't, wow, so they didn't get a bid yet, right, Jay? 1014. Oh, I thought they already got somebody bought them out. Maybe, I don't know. I don't know. Yeah, I don't know. You got what's his face in Wendy's, Eric. The activist. He's well known. Who's in Wendy's, guys? You guys know who I'm talking about. The older guy with the glitz. Peltz, Nelson Peltz. Right? So you understand, like, the reason why we're seeing that action, we know Peltz is involved, right? So you can see that thing. We see with Elliott a lot of times, So these are the names that are catching any real action that are out there, Earlier in the year, it was energy and commodity names. Oh, here's another one. I'm waiting to see if we see any more action in this. Yeah. Here's another, right, WK. So you got earnings coming up early November. And I love to see if they come back, because there's been some chatter around this company. I think Bravo, if I'm not mistaken, somebody like that. But they sold puts to buy call spreads, pretty big size. Stood out like a sore thumb. You don't see this action these days. But again, I'm making the point that these are the names that are catching the action. Off of the COVID lows, that whole bull market, everything was catching action like this. Everything. Tesla was getting bombed, call side all day long. You know what I mean? Risk reversals all over the place. All of that disappeared. It's gone. So the good thing about these climates is when it shows up, it's going to be hard to miss. You don't have to look through a million Tesla sweepers to find that one quality bet. You understand? It's going to stick out. So, but these are the only names that are catching this type of action, right? There's nothing else. Nothing else. No, nothing else. Amazon is, I have no idea. I'm curious to see the problem with the earnings this quarter, and I made a comment on Twitter on it. It's almost like, how could this earnings mean much this quarter when everything the Fed is doing, we're going to see impact the economy next year? You know what I mean? Yeah, but like guidance, I still think, like, even if they tell me guidance is good, I'm going to say, wait till next year. You have no fucking idea. You know what I mean? Like, you have no clue. So it's almost like, I told you guys, I compare it to like, well, the COVID rally when they were selling names off of earnings pre-vaccine. Right, okay, the earnings are shit. We knew that already. There was a global economic shutdown. But there's a vaccine coming, we're reopening, and numbers are going to get better. You understand? Like, what are we looking at here? Yesterday's newspaper? So that's what this earnings season, everyone's like, well, let's see what Amazon does. It means nothing. It means absolutely nothing. It may mean something right now, or the price reaction, but I'm saying earnings-wise, I don't see how it's important at all. The only good thing that you could hope for, if you are interested in these names, is you hope that they guide down significantly and estimates get taken down significantly so they can price some of next year in. You understand? So they can get that started already. Because I think it's even worse if their earnings hold up, because then when they start to unravel, things are going to get killed. Things are going to get killed if that's the case. So, but I understand, listen, earnings, it's still moving things around. Yeah, well, what conspiracy theorists say these days, Eric, that the Fed, that's all they need to do is buy those names. You know what I mean? To hold up the markets. Right? Nothing would surprise me anymore. These guys, as they're trying to hold on to credibility here, every day you hear a new headline of how these guys are trading through quiet periods. Right, Eric? Bostic and God almighty. You gotta be kidding me. They're trying to figure this whole QT and interest rate shit out, and these guys aren't aware of quiet periods they can't trade through. Bullard too? I didn't hear Bullard. Bullard too? Oh. I thought you meant trading. I thought you meant trading. Yeah. Jesus. He was at City during a quiet period. What do you mean? You telling me he's not aware of it? Later, PJ. These guys make you laugh, though, huh? No, definitely not. And don't forget the other guys were definitely that Clarida, right? He retired. Those guys, forget it. They were day trading. Clarida was day trading off pre-Fed news. Everything's rigged. Everything's rigged. Everybody wants to make money. They're no different, Yeah, who's going to put them in jail? You know what I mean? Who's going to put them in jail? They just disappear. They're untouchable. You guys remember? I think we were talking about this. I got deja vu. Remember Corzine? I was telling you guys he took down a whole firm and stole client money. Remember that senator from Jersey? I think it was senator. Forget about what he did. Later, Jay. Have a good night. So yeah, they these conspiracy theories, they sounded kooky initially. People make fun of these conspiracy theories. Now nothing surprises me. Nothing would surprise me at all with these guys. So anyway, before we run, what are you guys thinking now more on the trade side? What's your gut? You think we get a bear market rally here or what? Yeah, I tell you, I would feel really good about a bear market rally if it's so many. Think about this, right? Here's what I'm gonna tell you, right? The Bears. Think about the most public bears out there. I'll give you an example. Mike Wilson, right? What he just call for? Bear market rally. You know what I mean? Like even the bearish of bears out there are calling for bear market rallies. I come from a generation of traders and players in this game. Like the rationale was when you're in a bear market, you don't look for bear market rallies. You don't touch bear market rallies because if you get caught, you're dead. You know what I mean? That's how scared people were of trying to time bear market rallies. Now it seems like everybody is trying to time them. Yeah, Ray, that's what worries me, Ray. That's what worries me. That's what worries me. And that's another thing too, guys. Like just like common sense sentiment, right? When these bear markets come to an end, people are running around like their hair is on fire. You understand? They're not looking for lows and pivots and bottoms and bear market rallies. Arnett originally said lows in October, then rally before tanking. Is that what I keep it? So T, he's looking for. Oh, he's looking for a rally into the end of the year. I know he's looking for bottom next year. That I know for a fact. I'm a little. I get mixed up with what he's looking for. I'll look at it now. Oh, he did change? Well, we get the new note tonight, T. So I'm gonna read through it and I'll give you my impression on it too, see if you match up with it. You know what I mean? Tonight's. Yeah, I'm gonna read through it and I'll tell you my takeaway and then see if you have the same takeaway. Because these guys, every opinion counts. Every opinion counts. But you're right, sometimes these guys get a little screwy. I know, Sil. I know. Everybody and their mother's just looking for a bottom in general, Sil. You know what I mean? See, the other thing that can happen, which is a common thing, people are looking for a bear market rally, right? There's a bear market rally, and everyone's calling it a bear market rally, and it happens to be a real one. You understand? That can also happen, but I don't think we're ready for that yet. That's very common. In other words, we get a bear market rally and people doubt it. That's what happened off of COVID, if you remember. Exactly, Eric. Exactly. Why? Where is it now? Snap. I mean, it can only go to 0. Where is it? Oh, shit. 8, huh? You remember, how about this? You remember where Snap was? Where was Snap? Wasn't it down here before? Yeah. Look, this thing went to $85, guys. Snap. Like some of us, you remember, so we were in awe when this thing was like 20, $30. Like, oh my God, Snap is at 20, 30? How is this even possible? It was almost like a joke. It went to 90. These things are dead, man. They're dead. That's what I mean. Good riddance, no? Yeah, still a lot of people got torched shorting that thing. Nobody thought it was going above 50. Jesus, this is nuts, though. These so many stocks like this, man. Someone's got to buy them out eventually, you would think. Just what price, I guess, right? Nuts. Yeah, I mean, somebody can buy Snap. That's not unrealistic. But the thing is like, if you want to buy them, what makes you so eager to pay a price? Like, you almost better off being patient. You know what I mean? Waiting for your bid. That's what happens. These things just keep going lower and nobody wants to pay the current price. I forgot we got Hartnett tonight. I'd be interested to see what he has to say. So yeah, that's the thing. So you guys see the same thing, right? I thought, sometimes I get worried. I overthink things a little bit. But that's what concerns me here. The Bears calling for a rally. There was another big bear too. Oh, Dan Niles. Dan Niles was just on calling for a rally. He's been one of the biggest bears. There are more bears calling for a bear market rally than bulls right now. How about that? Bulls up there are more bulls left, right? Oh, Jesus. I think Tom Lee, that's the indicator right there, right? He was on CNBC today. Still bullish. Still bullish. These guys, the market can make anybody looks so good. You know what I mean? You know how many bears the market's gonna make them look so good off this cycle that we're going through? I remember every jabroni under the sun that was bearish in that 2008 debacle. Okay, I'm talking about shoemakers. Okay, absolute pikers that built up a name because they were bearish off the, in that 2008 downturn, and they built up such a following. And you know what ended up happening? They stayed bearish. They were even more bearish into the 2009 lows, all the way up until you don't even know where they are anymore. How about that? They're gone. Yep. Bearish Eric from the 2009 lows all the way up, calling for crash, the end of the world, buy gold, money printing is going to destroy us all. And all their followers in the bunker, all the way up to probably, I would say, from 2009, probably to 2016. Right? 2009 to 2016, I remember them calling for the end of the world. Jesus. What'd you say, T? Hold on a minute. Okay. Called Cyclical Bears Growl said if SPX 3706, 3740 gap resistance continues to cap rally, the immediate risk is for. Oh, this is from the technical guys at Bulver, right? Yeah. Let me see. I just want to take a peek at HeartNet before tonight's. Sometimes he posted so late. Let me see here. Oh, I didn't title it that. What the hell am I doing? More than that. Let's see what he says here. All right, the bear hug. Let's see. 5 hours after hot base CPI simply oversold 2 out of 3. Where is it? Big pickup performance. I think it's the next page. Nope. Next page. Oh, here it is. Here it is. All right, smaller picture. So this is the big picture. He's looking for a bottom in next year. We know that. Smaller picture. Simple tail inflation shock causing rate shocks turn threatening recession shock and credit event. Inflation shock ain't over. September CPI was hot. Okay, if sustained core CPI still 5-6% year over year like spring. Good news, one reason 3,030. Yeah, here basically he's saying that the reason that you could buy in that range 3,000 to 3,600 is because next year he thinks you get rewarded from buying that range. But it doesn't really say what he, hopefully tonight he clarifies. He's been on the money. But I mean, he's just, yeah, this one was really confusing. I remember when I read it, when it came out a couple of times, his more tactical view, I couldn't figure out what the hell he was talking about here. Because I think he was playing off the CPI at the time, but what date is this? October 13th. That's Friday. That's the one, right? Yeah, we'll see what he says tonight. We'll see what he says tonight. Yeah, he's saying he's been making the point that he's been going off the playbook of bear markets. Okay. And basically, to sum it up, what he's saying is at bottoms of bear markets, you get legitimate capitulation and a real Fed pivot. Okay, that's been his rationale throughout. Okay, So obviously we're not there yet. Okay. So he's making the point that if you want to buy ahead of that real bottom, capitulation or Fed pivot, you 3,000 to 3,600 is the range you could do some buying in. You understand? Yeah. No, listen, let me tell you something. There's some, there's some guys out there who are full of shit, right? Hartnett is legit. You don't see him. Do you ever see him on CNBC? Right? You never see the real guys. They never come out. You never see the real guys. He's never on CNBC Hartnett, but all like on Bloomberg, the morning they always talk about him. He's legit. Been around a long time. He's legit, Hartnett. You know what I mean? He's not Perma Bull. I don't want to mention names like some of the guys we just spoke about, or Perma Bear. He's been through bull markets, bear markets. He knows his shit. He knows his shit. And he sticks to his playbook. So that's been his take for a while now. Hartnett from Bova, the Flow Show. And I mean, this is the other crazy thing about this market, right? We talk about this a lot. Okay, you have the professional side, right, which is some sentiment positioning stuff is like at 2008 levels, and then you have the regular investor who had no signs of capitulation whatsoever. I want to show you this. So, this came out this week. This is Hartnett too, by the way. What is the no cuts, no glory? This is this is it, right? You guys saw the fund manager survey? So you have here, where is it? There's one line in here that sums it up. I wanted to show you. How come this didn't look like the one? Anyway, this is a global fund manager survey. So fund managers across the globe, positioning wise. Oh, it's right in front of me here. So look, macro capitulation done. Investor capitulation done. Policy capitulation starting. So that pretty much tells you everything you need to know there. There's one left. But the point I was making is that the professional crowd is so, they've capitulated. I don't think there's anything left for the professional crowd. It's been a slow capitulation all year. They're done. The pros. It's been the investors that are still stuck in there. Crowded trades, investors are now overweight cash, utilities, staples, underweight stocks. But the other thing, guys, you got to understand, this is global. Like, think about the rest of the world, right? Europe has had capitulation there. Some of those markets. So that's what's the thing that throws things off a little bit here. You don't have everything together. But you definitely have some parts of capitulation. Like where's the DAX? Like European fund flow? I have a chart too, if I could dig it up. There was capitulation there. So this is the DAX? Yeah, this is the DAX, right? EWZ and popped. Hey, did you play that? Anybody play that? Got some nice action too. It's funny you bring that up. Yeah. But you see how like it stood out compared to all the other crap we were seeing, right? It just looked a little different, right? You guys noticed that, see? That's why, guys, when the action starts to dribble in, telling you it's gonna be good times. Now, don't get me wrong, it's not gonna be a smooth trip. You know what I mean? What I mean by that is we're gonna have to deal with the noise of market volatility, headlines. You understand? But you're gonna see these things hold up, whatever's catching the action, hold up better and outperform. You understand? So you don't have to worry about it. Like now, it's like if you buy something and you're underwater, you feel like your money's lost already. Light it up on fire. That's what it feels like. But once we start to see the real action come in, even it's going to be selective, it's going to stand out, and it's like, I don't know, I'm a degenerate, but you get excited when you see it. You're like waiting, nothing, and then poof, here comes some real action. We haven't had that in a long time. You got to understand, the whole rally off the COVID lows, there was action all over the place. I went dizzy. Don't get me wrong. I love the action. I'm a bigger degenerate, just as big as anybody out there. But the flow was absurd. The COVID rally, the COVID bull market. Absurd. There was too much action. I was dizzy every day. You know what I mean? I was dizzy. So we went from that, right, record amount of call buying and everything, to now, it's garbage. Everything, you know what I mean? Mixed action, useless. You see an EWZ catch some action, stands out. That's how bad the flow is. So we went from one extreme to the other. That's what I mean. When the real action starts to come back into this market, it's going to feel good. You come in every day looking for new ideas. It's a good time. It's a good time. Yeah, everything is so short dated, and honestly, who knows if they're, spec bets or hedging. I'll tell you this, a lot of the weekly call activity we see, no doubt is short hedging, especially the sporadic stuff, the isolated shit we see. Yeah, Eric, clean it out. That's what I like to hear. Clean it out. Just get rid of it all. 10? Oh, that's not bad. That's not bad. That's good. 10's not bad. But yeah, you get a fresh, clean watch list and start throwing on some new names when they come. Yeah, it's just it's been a pain in the ass market all year. Pain in the ass. No doubt, pain in the ass. And some of these names, I can't, like, I can't believe this name, Twilio, okay, as darling as it was, this thing did not have a legitimate bear market rally in this downdraft. I never thought in my wildest dreams that this was going to look like this. You understand? Like, usually what I mean is I'll come down to here, and then you'll see something like this, and then I'll make a new low. I'll have like a really nice bear market rally. This is look at this. Look how tight that selling is. Look at this. Relentless. And you look at a chart, and this thing's still $80. Like, this thing was 400 and change, Twilio. Look at that chart. They're averaging down still. I mean, I'm sure they were averaging down at 200. No. What do you do? You just keep buying, I guess. That's their philosophy, Breen. Kathy Wood style. Wow. Crazy. Carvana. Yeah, I know Carvana. Ooh, Jesus. This one, I don't know much about it. All I remember was car vending machines. I know what they do now, but I couldn't understand why this thing went bananas. Like, see, Twilio, I mean, Twilio, it's a legit name, isn't it? I know they're not making money anymore, though, are they? I think they're losing money. Yeah, they're losing money. Square, that's yep. And that was out of favor even when they were still hot. Look at this. The whole entire move gone. Look at these stocks. Yeah, Peloton was a disaster to begin with. That was so much hype in that thing. Oh, it's woo. Wow. There's so many, right? Yeah, I mean, they listen, they all you get into bear markets, and I remember, like I told you guys, Micron, people were scratching their head, was trading at like 2 times earnings for 6 straight years. It was trading at a 2 multiple, Micron, in a bear market. Now, you're talking about companies that are losing money that, whatever price metric you put on them is still, not cheap. GoPro had some second life to it. I thought it was going dead, and then it had a second, it came to life again. Where was it? Yeah, look. Look at this. All right, look at that. Okay. What a debacle. Roku, I know that hurt a lot of people too, this thing. Jeez. He's still almighty. Yes, SE. I look at it every day. Every day. This is, I mean, crazy, crazy. This name was the hottest name on the board. Which one are you talking about, Eric? Oh, DDD. I remember that. There was one that traded with DDD too. It wasn't as hot. There was another 3D name that always used to move. Envo, that's another one. There was another one too. Wow, that's crazy. I even know these stocks. Look at this. Oh, DDD, what a piece of garbage. And that's it. Thank you. I was gonna rack my brain all day to try to think of it. SSYS. Whew. Thank God you came up with it. It would have hurt my head all day. Look at this now. Look at these. But some of these names don't surprise me. What they do, they come and they go. Yeah, but you got. I guess I thought Twilio was more of a legit name than like a DDD. But listen, you get into bear markets, it doesn't matter, right? That's what you remember. We spoke about this. It doesn't matter. You could be real as can be and get destroyed. Fubo's done. Fubo's going to zero. Where is it? I haven't looked at it in a while. 3. Oh, you're there already. Fubo's done. Fubo's done. I mean, these things can't even find. Like Fubo looks like it might find a floor here at $2. $2. I don't know. You think about Eric, a lot went into. Yeah, exactly. How much juice went into this last run up, right? The money that was out there, crazy. See, you guys have a better handle than I do because I'm not even involved in that other side with like the Bitcoins of the world, crypto and all. But I don't. How do these people with all that money they had that much money, they can absorb this type of pain? Doesn't feel like there's much pain out there. There was that much money out there, right? I know. See what Praveen, what you just said? Like, you can't have that. This world crack and crumble around us. You have shit like that going on. But what? Let me ask you a question. The money, what they made money in crypto, right? So they were given money, and then they made money in crypto. Where'd all the money come from? Where'd they get this money? That much money? They made it? Like, maybe let me rephrase this. Who's buying pictures of a monkey for 200 grand? Like, none of you would ever do that, right? I mean, who does it? Who's doing it? Right? But I'm serious. Like, who's buying pictures of monkeys for 200 grand? Like, none of you would ever say you would. Like, in my wildest dreams, I wouldn't pay $2, let alone 200 grand. Who's buying it? Kids? They're young kids? What are they? Like, and I know Snoop Dogg. I know a lot of money was made from this Bitcoin and all these coin shit. You know what I mean? There's a lot of young people made money off that stuff on this last run. So I guess that's where all the money came from to pay these crazy prices on all these things. I don't know. Still says I'll pay for a pic of me buying a put. Oh, you're funny. Yeah, there's so much, right? They had the NFT racehorses, NFT games. There's so much shit. Remember, all the athletes were coming out with NFTs. Gronkowski had his NFT, was on CNBC. I can't believe how much CNBC fed into all this shit. Matt Damon promoting crypto. SPACs with A-Rod and J-Lo bringing their companies public. Oh my God. Well, like you could see the writing on the wall. The problem is, like, if you try to make a betting against it, you could be early and lose all the money, even if you're right. You know what I mean? Like, it was so obvious, though. You know what I mean? It was so obvious that it wasn't going to last. It can't last. You can't have A-Rod and J-Lo bring companies. You can't have anybody just bring a company public and get hyped up and go parabolic. Yeah, that's the thing. The pain, it's how much pain can you absorb, right? To stay in that trade. Like, look at the guy, what's his face on Twitter, who the housing market in 08, right? What's his face again? Yeah. Like these guys nailed it, and you know how close they came to being forced out of the trade? Playboy. Remember how hot that stock was? I used to love trading that stock with sweeps. Playboy. Oh, they were crazy. Good times, man. Good times. We're going to talk about these times over a scotch one day. Yeah, Big Short. But seriously, like, even when you nail a big short trade like that, calling it and sitting in the trade to cash a ticket, whew, not easy. It's not easy. Later, Sil. Enjoy the night. I'm going to wrap it up too. I can't. The Yankees, I can't anymore. I got agita and I get stressed out from watching these games. I'm 100 years old and I still let these baseball games stress me out. I can't take it anymore. They're not enjoyable, these playoffs, I like the regular season. Nice. No stress. The playoffs, I can't get too. Yeah. All right. Enjoy the night. Enjoy the game, guys. T, I'll post some comments on the Flow show tonight. Let me know what you think. Have a good night, everybody. I'll see most of you mañana.